Jonathan Sheasel also joins in with his perspective on the Indian markets. And you've been watching the Indian markets for a couple of decades, actually, I'd imagine, Jonathan. It's been a great ride. While we've, of course, been giving our viewers the benefit of in-depth analysis over the last 8 years, what do you make of the India story from here on?
We're still extremely comfortable and very optimistic about the story. I mean, on a global context, India continues to stand a country mile out from particularly other emerging markets. And certainly when people are looking for growth in the world, sitting in our growth-starved developed markets, India really does still stack up very well.
Yeah, but Jonathan, we, Nikunj and Basant, were just talking about housing finance companies. It's damn interesting to see how just anything suffixed with housing has taken its time to move up. So real estate as a sector has not really seen that kind of traction. Of late, of course, the story has been very different with the regulator coming in, and I don't know whether you're seeking opportunities there. But the financing business that supports housing is roaring away.
Yeah, look, it's a space, I equally would agree with the last commentator that it is an extremely interesting space. Obviously, it's an alignment of policy and an alignment of underlying macro fundamentals in India. It just makes a lot of sense. And obviously, the opportunity set is still so vast, particularly in that economy housing space. So, yes, there's some big players that have been around for a number of decades that have sort of hoovered up as some of the top tier cities, but it is such a vast opportunity when you start spreading it across the other metros in India, and clearly when you start focusing as well on that economy housing and the market opportunity that presents if you can get it right.
Are your lock and key stocks for India? I mean, which are three names, Jonathan? Let me rephrase my question. 3 stocks you've owned from last 5 years, and you have every reason to believe that as of today, you may not want to sell them for next 5 years.
We try. Well, I mean, for us, what we try and do is find stocks that we can own for many, many years. And we tend to not trade in and out of stuff too much. We want to align ourselves with top quality businesses, with top quality owners, with top quality managements. So, I was just doing some numbers on a stock we've owned for over 6 years, which is, Eicher Motors. That's continued to do extremely well for us. We've been told repeatedly by various people on the sell side and analysts to sell the stock, but that's continued to generate fantastic compounding returns. Some of the finance companies, as you've just been talking about, we've been owning Capital First since that sort of restructuring story has been coming through. So we're very comfortable and think that's got a huge runway still to go over many years. And, I could look across multiple different sectors, and we find many companies in India today that are actually geared up to sort of grab the opportunity which we believe India does offer. But, there are some which you need to be somewhat more careful of, but there are a lot of really good stocks out there.
Yeah, and based on the expectation that earnings would pick up soon enough, maybe a quarter or two going forward, where is it that you're placing your new bets in FY18? What is it that you're looking to buy? Have there been any recent positions added? If you could share those with us as well. Jonathan?
So we've certainly after I think this slow and gradual resolution of the NPL crisis, or at least getting more positions in place, that's certainly helping at the moment, and I think that's coming through. So some of the corporate banks in India today, the ICICI banks and stuff, look quite well positioned, particularly when you compare valuations compared to the retail-focused banks. So we're quite attracted to those. We have been adding a little bit of new money into that area, and in addition, we've been putting on a bit more cyclicality in the portfolio. So Hindalco is a fairly recent purchase of ours. We've owned it in the past. Again, we're looking for stocks which perhaps are not quite so structural in nature, just at the moment. So we're adding a couple of names which, if you like, are a little bit more geared to a cyclical recovery, which we think India is finally beginning to enjoy, and obviously we think that runway has some distance to run.
One style of investing which supports buy growth, and India is a growth economy, but there's other style of investing which says, okay, hunt for value, because ultimately markets will recognize value, whether it is cyclicals or names like L&T or some industrials. Are you ready to buy into that so-called word dirty picture?
So you know, ultimately it's a growth market. So we're very much aligned with that. I think traditionally, when you look at what's value in India or indeed other emerging markets, they tend to be either very highly cyclical stocks or stocks with perhaps less reputable managements or promoters and stuff. So there's a discount attached to stocks for that reason. So traditionally, we would certainly have been focused, and certainly are focused on the more growth quality type names, which tend to spend, tend from a valuation perspective to be more expensive. If you look at what's potentially value today, then there's no doubt, if you look at the IT and some of the healthcare names, which quite frankly have been dogs over the last year and a half, 2 years, there is certainly value emerging in those spaces. It's difficult, it has to be said, to sort of see in the short term a sort of catalyst for that value to be unlocked, if you like, and the re-rating to start. But there's certainly, when we look at long-term valuations in IT and healthcare, they do look attractive. But that shouldn't form the bulk of any portfolio. That gives you that hedge, if you like. Because obviously, if you are geared totally into the high growth space and you get a bit of volatility, then those names tend to suffer quite badly just in the short term. So yeah, we are reasonably weighted to IT and healthcare. And certainly that, from our perspective, is where we see value today.
So Jonathan, let me get closing comments from you as well. And I'll keep this one very direct and simple. Now, the endeavor for any investor is to find multi-baggers. Now, it's only hindsight will figure out whether the stocks you bought right now multi-baggers or not. But one works always with this probability thesis. So if you have to apply your insight and your research, give me 3 stocks where you think there is scope of big market beating returns.
Well, you put me on the line there. I think the reality, I guess it's the stock return you're looking at and the market return. So I think I would agree. I think India looks very well set up. If you look at current valuations, they look a bit pricey. But of course, as anybody who looks further ahead, you can build a very, very optimistic outlook for where this index can go. Why? It's the earnings, isn't it? I mean, that's what it's all about. And clearly, we're troughing from an earnings perspective. Now, when you look at individual counters, what we try and do is basically find companies in attractive industries or attractive sectors where we believe there is this excessive growth opportunity. We're trying to find companies where, obviously high growth usually means high competition. Super normal profits are very attractive to a lot of people out there. And therefore, if you've got areas where you're earning super normal profits, you tend to find a lot of new entrants coming into those spaces. So if you can find the high growth spaces, and then if you can find the companies that you believe have the moats or the ability to carry on competing and growing its market share in those spaces, those are the sort of businesses you want to align to. And thirdly, and possibly just as importantly as getting the sector right, getting the company that can play into that sector right, it's finding the management team who treats their minority shareholders properly, so that actually some of that growth also accrues to the minority or you as a shareholder. So those 3 factors are very important to us. I don't know if I'm going to really name 3 stocks, if I'm honest. We've got we've got a very concentrated portfolio of just under 30 stocks. We have very high conviction on most of them. Some of them, we know that they're not going to be growing that fast in the next 6 to 12 months. But it's about building a portfolio that there are some which we see huge potential, but also it's just getting the overall portfolio composition right. So an investor has to make sure he gets the balance right and is not too unbalanced.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.